JJ the CPA here. Hope you're doing well. Can you get ERTC and PPP at the same time? Well, yes and no. Let me be clear on this. With PPP and the ERTC, you can claim it on the same employee. You can claim it on the same payroll period. But what you can't do is claim both on the same payroll for that employee during a payroll period on a specific amount of compensation. Yes, it gets that technical. I have a seminar that you need to check out related to the ERTC, and I'm going to put a link in it. It will blow your mind the amount of information that I'm going to give you from every angle of the ERTC. The IRS and the SBA have made it clear in black and white that you can take PPP and ERTC on your covered period of payroll during your shutdown and during a quarter where your wages are qualifying because your gross receipts are down. But let's be clear, it's not on the same amount of compensation to the employee, but many are thinking, because it seems logical, that one pay period is either ERTC or PPP forgiveness. It's not. Many think that, well, until the payroll for this employee is then used up for PPP, then it's available for ERTC. That is not the case. Some think that, well, when I get PPP, when I use up my PPP funds, then I can start taking advantage of ERTC. Wrong. You get to pick and choose. The IRS and the SBA have made it clear in all of the instructions for the PPP forgiveness, and with a recent announcement from the IRS, I will give you links to both, that even if you have payroll compensation to the same employee, that both of the PPP and the ERTC can be applied to, meaning that payroll could be used for PPP forgiveness or it could be used for ERTC. You get to choose which one you want to apply to it. This is not, in essence, an opinion. It is a fact. But whatever you use it for, then that's what it's locked into. What I'm doing with my clients, what I recommend with you, is that you get a spreadsheet put together that breaks out employee by employee their compensation, breaking it out from the time that the government shutdown began to when the government shutdown ended, and or from the period of time when your gross receipts were down, so at the beginning of that quarter to the end of that quarter, and then also with your covered period of 24 weeks related to PPP forgiveness. So I've got an Excel spreadsheet that I will be including in the seminar, that I will be going through that during the seminar with a special video related to that. Today is March 19th. I am putting that together for the seminar tomorrow, March 19th. You have time to sign up for it. If you miss it, well, I may re-release and make it available to you, but here's the thing. I want to make sure your takeaway here is that you can literally split the compensation to an employee on a specific day if you needed to. Meaning, the morning compensation could be used for ERTC, and the afternoon compensation for the same employee could be used for PPP. You simply can't use the same compensation for both. So when you're trying to ensure that you're able to get a maximum amount of the ERTC, assuming you qualify otherwise, and you're wanting to maximize your PPP forgiveness related to your payroll, it does require some analysis in pretty much every circumstance. If you haven't heard, the Employee Retention Tax Credit has been extended through the end of 2021 with the recent American Rescue Plan Act. I go through those details. Hopefully you've already heard that for 2021, your ERTC tax credit is 70% of the first $10,000 of qualifying wages to an employee, and that's per quarter. So in essence, if you paid an employee $10,000 per quarter, and assuming that they're qualified wages and you and your business qualify for the entire year of 2021, that would be a $28,000 tax credit related to this with the employee retention tax credit. However, whatever wages you're using for this tax credit, you cannot use those same wages for PPP forgiveness or any other type of payroll tax credit, including the sick and family paid leave credits. In my seminar, I go through all of this, hours and hours of various videos. As it stands now, you've got 10 videos that walk you through every aspect from aggregation to family being included, how to report this, how it works for taxes, examples, flow charts, Excel spreadsheets, how to prepare a Form 941X, how to prepare the Form 7200, when you get to use those, when you should use those, how to get one of the 4 methods of actually getting the money. The employee retention tax credit is still not getting enough attention. The IRS has been slow to get information out on this in a way that's easily consumable by those that are not familiar with the tax laws. So more and more information will come out on this, but there's no reason for you to wait for that. There's no reason for you to wait for the V8 moment when you're out with your friends that is a fellow business owner, and then they tell you that they got a $410,000 employee retention tax credit, and you're going, well, why didn't I get that? Well, because you didn't take my seminar, and or you didn't at least take this video and go to your team to then determine if you qualify. In 2021, you qualify from having your gross receipts down by at least 20% in any quarter in 2021 compared to the same quarter in 2019. You heard that correct. It wasn't an error. You compare 2021 quarter to 2019 quarter. Well, 2019 was well before the pandemic. That is why you're able to compare all the way back to then. Little known fact just released from the IRS that you would know if you had taken my seminar is that the fourth quarter of 2020 can be compared to the fourth quarter of 2019. And if that is down by at least 20%, that means you qualify for first quarter 2021. Doesn't change the qualifications for you to get the employee retention tax credit in 2020. Are you scratching your head? Are you wondering if you qualify? There's only so much I can pack into one video. Guess what? Good news. It's a very inexpensive seminar. You still don't want to spend $197. I've got a playlist for you walking through. Now, the videos I just mentioned to you are not available on that playlist. Why? Because it requires you to be a part of the seminar, not from a standpoint of manipulating you, but the amount of information, the criteria to qualify, the specifics, and the technicalities require that you have the full picture with the full documents and links and examples and Excel spreadsheet so that I ensure I have your full attention in the various seminars. Each seminar, the one that I did originally that's 2.5 hours, the one that I'm doing tomorrow on the 19th is at least 2 hours. The first one was 2.5 hours with 3 hours of Q&A. You have access immediately to that. You have access immediately to all these other videos. And the video that or the seminar that I'll be doing tomorrow, I'll be recording it and you can play it back as many times as you need to, going through the examples, referring back to it, and you'll have access to all of that for 90 days. If you're listening to this video and you're past March 19th, look in the body. And if I have decided that you can have access to it, because I'm not sure if I'm going to, then you will find a link to be able to get access to all of that immediately. This is serious business. I got a phone call from somebody that had watched a couple of my videos and had told me that by convincing their accountant that they probably qualify because their accountant originally indicated they didn't. They ended up, though, getting a $410,000 employee retention tax credit. This is serious business. Yes, it's going to require a little bit of analysis, a little bit of work. But when you look at the smallest business that could get an employee retention tax credit, there's no way that you're not going to get a few $1,000s out of this. So if you're closed down or if you have a reduction in gross receipts, you qualify. The IRS goes out of their way to show you in their FAQs, and most recently in the FAQs that we can rely on in IRS Notice 2021-20, that essential businesses can qualify, period, the end. If you've been told essential businesses don't qualify, I hate to say it, to be blunt, you have been lied to. The person that told you that is ignorant. Doesn't mean they're dumb. Doesn't mean they're an idiot. What it means is that they're ignorant, meaning not informed. You're now informed. You need to take a look at it. Why am I being forceful on this? Why am I using a tone on this? Because so many businesses are missing this. It's incredible the amount of businesses that are absolutely missing this. You've been shut down partially or full. Commerce has been affected. You qualify. Your gross receipts are down. You qualify. All right. Hey, listen, I can't stress it enough. You need to look into this. You want to skip my seminar. You don't want to pop down $197 to get a $410,000 tax credit or a $5,000 tax credit. That means you have advisors that are informed. So get after it, get with them, and make sure that they're giving it to you straight. And if they say you don't qualify, do not take their word for it. What you need to do is have them show you in black and white how you don't qualify. Even if you have to pay for their time to show you how you don't qualify, demand it. Demand it. This is real money. And many tax professionals don't get in this aspect. They don't do payroll. They're in tax season. They're dealing with PPP. They think they have time to get after this, or they're simply ignorant. Why? Not because they're lazy, maybe. Not because they're being purposely ignorant. They haven't taken the time. So if you don't have your payroll done by your CPA, your EA, or your accountant, okay, they may not be fully up on this. Doesn't mean that they're a bad person and you should fire them. What it means is they're ignorant. And yes, I'm being minorly insulting to those accountants and EAs and CPAs that off the cuff are saying, oh, you are essential, or oh, you don't qualify, without spending the time ensuring that. For EAs and CPAs and tax professionals, then if you're not sure, then you tell the client, hey, I'm going to need to charge you because this is a big credit. It's not straightforward. I need to take a look at your facts and circumstances and take a look at it. Why? I'm going to explain it one more time. Why am I exasperated? Why am I agitated and frustrated? For your sake, for your client's sake, okay? To take advantage of this properly. Because it's available to you, it's there for a reason. To take advantage of it properly and not let this opportunity, if you qualify, slip away. It's money on the table for you to have because of the pandemic. If you've been shut down, partially or full, by the government, if your gross receipts are down, you qualify for this. Just the same as if you spent money on machinery for your business that you use in your business that you bought, you get to write it off. And the tax law allows you to write it all off in the first year. No one sits around and goes, well, I don't know if I really want to do that, or, well, I don't think you should do that, or that seems like too big of a write-off. Wrong. You would go, you know what? The law allows me under Code Section 179 or bonus depreciation or the depreciation rules to either take it all up front, expense it, or take it over time. And you would just do that. For some reason, with this employee retention tax credit, because previously those that got PPP were not eligible for ERTC. When now they are, many of us, including me, were not necessarily having to pay attention to it because the majority of you, of businesses, of clients got PPP. There was no ERTC to look at. Yes, it's brand new, but it doesn't mean that you wait till this gets so stale that you're out on the fishing boat, that you're out on the golf course, that you're having breakfast or you're having lunch or you're hanging out at the soccer game and you learn that a fellow business owner got a $10,000 tax credit, a $50,000 tax credit, a $450,000 tax credit because they weren't lazy, because they were adamant to get the answers. And then they went and got the credit. If you don't qualify for it, then yes, you can't take it and you shouldn't take it because then you would be committing a crime. But the law is there for you to take advantage of. The law is there for you to ensure that your client is taking advantage of it properly. So go do it. I don't understand this concept in any way, shape, or form of just, well, if you're essential, you don't qualify, or you name it. There's no possible way that you just look at a circumstance and you can make a decision in 30 seconds. There's questions that have to be asked. Financials have to be looked at. You have to analyze PPP and the ERTC and making sure that you're qualifying. Yes, it's hard work, but isn't that worth $410,000, $10,000, $5,000? Isn't that worth it for that? Yeah, you bet your bottom dollar it is. All right, hey, listen. Go to the playlist. Go to the IRS. I'm going to give you some links. If you are a do-it-yourselfer, then get after it. You want some help with your do-it-yourself? Then check out my seminar. I don't know what to tell you. $197 for all the material that I'm giving is a ridiculous deal. I'm doing it for that amount of money so that you're able to take advantage of it. It's there for you to take advantage of and in detail. So I have CPAs and EAs and tax professionals that are taking the seminar and they're reporting back to us. The price of admission is worth the immediate links and the immediate flow charts and the immediate Excel spreadsheets and the immediate videos that you get and the how-to. And yes, of course, then the seminar. So anyways, hopefully you'll make it, but more importantly, hopefully you will make sure you qualify for this. And if you don't qualify, you'll make sure that it is true that you don't qualify. All right. Hey, thanks for tuning in. I'd love it if you subscribe. And then don't you ever forget, you've never met a CPA quite like me. And you know that that is true. All right. Have a great one.